welcome to Morning Trade with Money Control. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable strategies, sectoral trends, and most importantly, your queries during the course of the show. So please keep commenting on our live feed. We'll have your questions addressed towards the end of the show. Before bringing our guests on board, let's see what the global handover looks like. After posting a historic turnaround, stocks on Wall Street slipped again on Friday as investors digested inflation expectations. The Dow fell over 400 points, S&P 500 shed over 2% and notched its seventh negative close in 8 days. Nasdaq shed more than 3%. Europe, on the other hand, closed higher after the UK government U-turned on some of its controversial fiscal policies and the country's finance minister was fired. Stocks in the Asia-Pacific opened lower amid recession fears over expectations of continued tightening monetary policies around the world. The SGX Nifty is also signaling a triple-digit cut on the Nifty. Back home, HDFC Bank posted healthy second quarter earnings with double-digit growth in the bottom line. We get you the top highlights of the performance, along with a preview of what to expect from other large BFSI players. Among individual names, we focus on D-Mart, L&T Infotech, Dilip Buildcon and Bajaj Auto. All right, let's get this going. We're now joined by my colleague Neha Dave from Money Control Pro to talk about the banking sector earnings with a special focus on HDFC Bank. Neha, decent numbers overall if we look at the fine print, the headline numbers. What has been your verdict?
Thanks, Karunya, for having me. Yeah, so HDFC Bank reported a very strong set of numbers, and this was mainly driven by robust loan growth, fall in credit cost, and though there was some treasury loss and operating expenses inched up, but overall performance was very good. The key positive from the earnings was the uptick in the margins. The street has been concerned about HDFC Bank's margins, which has been falling since last 4-5 years, and it has fallen from a peak of 4.4% to 4.1% in the current quarter. But this quarter was good because the margins improved by 10 basis points sequentially. Also, the bank has been traditionally focusing on corporate lending in the last 2-3 years, which had impacted margins. But there was a really good pickup in the retail lending book also, so which is a good news. So overall, it is a very strong set of numbers from HDFC Bank. However, we have seen that the stock continues to be a weak performer. It has underperformed Nifty and ICICI Bank in the past 3 years. And but it's not basically because of margins or earnings. It is mainly due to the impending merger. So once the uncertainty related to merger, abates, the stock can perform well because earnings continue to be very strong.
Okay, all right. But what about the overall, assessment of how things have panned out during Q2 for other lenders as well? We've had Q2 updates from most of them. But in terms of results, a lot of banks still pending. So tell us what to expect overall in terms of the larger trends.
Yeah, so the banking numbers would be very strong in Q2 FY23, and the earnings would be mainly driven by a very strong top-line growth. Now, the primary reason, obviously, is the credit growth number. For the system, banking system as a whole, credit growth has picked up and accelerated to 16% as of September end. And there is a strong loan demand from across business segments. Retail continues to be the key driver, and the ongoing festive season will keep the retail demand quite high. Also, there is a pickup in the corporate demand, and this is mainly due to the working capital needs of the corporates have gone up because of higher inflation. So the credit growth number is really looking up, and that will be the key driver for the bank earnings. Also, some of the large banks would report improvement in margins. That is primarily because of the increase in the interest rates. And though deposit rates also have gone up, the loan book tends to reprice at a faster pace and much earlier as compared to the deposit book, and that will drive the margins. So overall, top line growth will continue to be very strong. The most important is the asset quality side. The asset quality numbers, the gross NPA numbers for the banking system as a whole should trend downwards. Provisions would be lower, and this would drive the strong earnings growth. However, one needs to be very watchful of one particular parameter, that is the other income piece, because there is a hardening of the GSEC yield because of the rising interest rates. So there could be some treasury loss for some banks. But overall, very good set of numbers anticipated from both private banks as well as public sector banks. There could be surely some exceptions, like some banks which are mainly into microfinance lending, like Bandhan Bank. One needs to be very watchful of asset quality. Even the small finance banks, one needs to be watchful of what's happening on the asset quality and provisioning front. But overall, very good set of numbers anticipated from the banking sector.
But do you think, Neha, that has been already priced in by the market, given the resilience we've seen last couple of months in banking and financial names? Of course, right now we are witnessing a broad-based, volatility in the market. But given the buying that we've seen, do you think that's already priced in, or do you expect more room for a re-rating of certain names, or for further, uptick in certain names?
Yes. Yes, one needs to be selective because some banks must have already priced in the improvement in fundamentals and financials. But there are many large banks where there is a possibility of re-rating. For instance, SBI. SBI even today is trading below its one-time forward book, and so there is a very strong chances of re-rating of SBI. Also, the smaller banks, are reporting good set of numbers. Now we have seen that the rally in the large cap names mainly. So there are some small banks where there could be some catch up. Like for example, Federal Bank has delivered good set of numbers. DCB Bank we like because again the earnings is anticipated to be very strong. But otherwise, broadly, some private banks will continue to do well. Our top picks in the sector continues to be SBI, HDFC Bank, ICICI. DCB. So these banks are likely to continue to do well, and there could be further re-rating.
Okay. But overall, if we look at a big picture view of the BFSI segment, whether it's NBFCs, insurers, do you think they are also likely to, hand in a good set, or do you see some pain, especially insurance stocks, which have continued to languish for quite some time now?
Yes. So insurance, the private insurers continue to do well. Primarily, they are gaining market share. But one needs to be watchful because a lot of that is in the valuation. So insurance selective, investor needs to be selective. We like ICICI Prudential because of its lower valuation as compared to HDFC Life. SBI Life will continue to do well, but again, one needs to wait for a better entry point. That is as far as insurance is concerned. For NBFC space, it would be mixed trends, So housing finance companies should register a strong earnings growth. And but again, the valuation there, some of the stocks, one needs to be very selective. It won't be a kind of a rising tide lifts all boat kind of a scenario for NBFCs. Only the NBFCs which are having a niche segment or, will see a re-rating. So NBFCs won't be as strong performance as compared to the banks.
Okay. Well, Neha, thank you so much for joining us and sharing with us your view on the entire BFSI space, and of course, talking to us about in detail what to expect from their Q2 performance, especially for the lending space, the banking space. Okay, moving right on, let's touch base with Nilesh Jain from Centrum to talk about the technicals of the market. Morning, Nilesh. Let's continue our conversation on the banking space because definitely that's something that has been a big talking point in the market and could be, on the back of HDFC's numbers and the ones that are likely to follow in the next 1 week, 1 or 2 weeks. How's the banking index looking and some of these large cap names, HDFC Bank, which has already delivered numbers over the weekend, ICICI is next week. So in the run up to that and post the any action that you foresee, any meaningful action?
Very good morning to you, Karina. Karina, if you look at the overall banking space, we have already seen it has outperformed the outperformance in the bank Nifty compared to the Nifty index. Recently, in the previous month, it reached the all-time high levels of 41,840. And from those levels, we have witnessed some sort of profit booking. But looking at the overall major structure of the bank Nifty, I won't be surprised if in this series itself, we see levels kind of 40,000 and 40,500. Which is roughly around the 1,000 point from the CMP. And if you look at on the lower side, the support, I would say a base which is built up at 38,000 to 38,500 zone. So overall structure looks very much bullish, and any decline could be a good opportunity to get into banking names like HDFC Bank, ICICI Bank, and also Axis Bank. And not to forget Federal Bank, which we will highlight. We will talk about that particular counter going forward. But looking at the overall structure of the HDFC Bank, we have seen a lot of underperformance. In the recent times, it hasn't given that kind of participation that we saw from the names like IndusInd Bank, ICICI Bank, and Axis Bank. So a lot of underperformance can be seen, and I think at current level, the risk and reward is also looking very much strong. And from a positional perspective, I believe 1600 to 1650 should be the target that one should eye on. And at current level and on decline, it should be accumulated. From slightly 6 to 8 months perspective, I would say that should be the time horizon that one should have. On the lower side, 1350 is the strong support zone. So I think even if we see any gap up opening, then also it can be added and wait for some sort of a decline on the back of profit booking. It should be added in a staggered manner. Apart from that, ICICI Bank, the numbers will be coming very soon. And this stock is also looking very strong. On the higher side, it is likely to hit the previous all-time high marks of near about 920 to 930. And our positional target is very much intact of 1,000 rupees. And at current level, it can be added with a stop loss below 840 on the closing basis.
Okay, all right. I want to flag off some more earnings candidates that came out with their numbers on the weekend. One is, of course, D-Mart, the street's favorite. Talk to us about the chart of Avenue Supermarts and what it's indicating at, because the numbers overall look good. Q2 PAT has surged 64%, EBITDA is up 33%. They've expanded their operations now to more than 18 cities. Margins, however, have seen a mild contraction. But let's talk about the technicals. What do you see on the chart?
Well, Karunya, the last quarter was also very good, but we haven't seen that kind of outperformance and participation from this particular counter. But I think it is witnessing some sort of a time-wise correction. That is a good thing, and we have already witnessed earlier a strong run-up in past couple of years now. Now, looking at the overall structure, I think it's a good entry point at current level, and it is again a portfolio stock, so better to add on declines from a positional target of near about 5,000 to 5,500. If somebody has a time horizon of, let's say, 1.5 years, then I think the target should be 5,000 to 5,500. The stop loss should be placed near about 4,100, and any decline should be a good opportunity to get into this particular counter. And looking at the major undertone, which is looking very strong.
Okay, all right. Let's talk about the next name on my list, which is also an earnings candidate, L&T Infotech. Again, a steady set. EBIT has climbed 7.8%. Q2 profit is up 7% QOQ. There's been a good constant currency revenue growth as well, 4.5%. But let's talk about L&T Infotech's share price. Last 1 month, decent momentum, 7.5% added on the upside. Can the rally sustain?
Yes, Karuna. See, specifically mid-cap and small-cap ITs are showing some sort of a strength. And looking at the carnage that we have seen in this calendar year in overall IT space, I think from current level the downside seems to be limited. And the set of numbers that we have seen from the counters like TCS, I think it's a good sort of indication from the overall IT pack. For L&T Infotech, I think support is near about placed at 4,300. And if at all we see any decline, that should be used as a buying opportunity. It is again on the verge of a major breakout. The breakout level is placed at 4,800. If it breaks 4,800, then I think the upside will again open up for near about 400 to 500 points. And I wouldn't be surprised if it hits 5,500 in next 2 to 3 months. So it's a good candidate and can be added. Apart from that, large cap names like TCS and SL Tech, those are the other counters which are also looking positive on the chart.
Okay, all right. The next stock on my list is Dilip Buildcon, not an earnings candidate, but there's been a corporate development there. They've bagged a contract worth 700 crore rupees from Gujarat Metro Rail Corporation. The completion period for the Metro Rail project in Gujarat is around 26 months. So on back of this deal win, Dilip Buildcon, do you think it could see some action on the stock price today? Last 1 month, rather weak for the counter. What lies ahead?
See, this particular counter has formed a sort of double bottom formation at 185 to 190 zone. In the year 2020 March, we have seen that kind of low, and similar low was seen recently in the month of July. and I think that's a good support. That's a very strong support. It has near about 185. That should be the stop loss for a positional, investors. And there could be possibility of a pullback on the back of news, but the major structure looks sideways, and the volume is also very much low. So I'm not that much interested in this particular counter. But yes, pullback can be played for the upside levels of 250 to 260. The major structure still looks sideways. There is no attraction as of now. The trend will reverse from sideways to positive if it breaks above 260. So watch out for 260 levels. Breakout above 260 will open up upside for 300 to 350. But as of now, it looks sideways. One can stay put in this particular counter with a stop loss below 185.
Okay, all right. And the last and final stock on our list today is Bajaj Auto. Again, continues to be hit by commodity headwinds and supply-related issues. Q2 profit slipped 16% because of high base effect as well. Revenue, on the other hand, has shot up by 16.5%. EBITDA is up 25%. Could be good news for the street as well from a stock standpoint. Margins have seen a good expansion of 120 bips as well on a YoY basis. Let's talk about Bajaj Auto. In fact, several of these auto names saw a good run most part of the year. Right now, it's trading at 35, 60, 70 levels. Talk to us about what lies ahead for a Bajaj Auto.
First of all, from two-wheeler space, Hero Moto and Bajaj Auto both have not, given that kind of attraction that we saw in TVS Motor. So, from a trading perspective, there could be possibility of a pullback that can be played for the upside target of 3,700 to 3,750. But the major structure looks slightly on a sideways front, although it hits a fresh all-time high in the last month. But some sort of consolidation, which seems very much likely in the range of 3,800 to 3,400. So 3,400 is a very strong support. If somebody has a long position, then keep a stop loss below 3,400 on the closing basis, and one can remain long. But on the other hand, the conviction that we are getting, that is in TVS Motor. TVS Motor is in a secular uptrend, and the chart pattern is very strong. And it hints that it is heading towards 1150 to 1200 sort of zone. So TVS Motor can be bought on decline with a stop loss below 1000. So from two-wheeler space, that particular counter looks very strong. Okay.
Quickly addressing some queries then coming in from our viewers. Sudha is asking your view on JSW Energy. What would be your advice?
If you look at the JSW Energy, we have seen a very strong move in last 2 to 3 years. In the year 2020, we have seen the pandemic low was near about the 35. And from those levels, it has hit the highs of 400. So at current level, it is witnessing a time-wise and a price-wise correction, some sort of consolidation that seems likely on the chart. But from a positional perspective, it looks like it is heading towards 400 mark. From next 6 to 8 month perspective, one can remain long with a stop loss below 290. And on the higher side, if it breaks 350, then upside will again open up for 400 to 420.
Okay. The next question I want to take is from Raju. He wants your short-term view on Coal India. And since we're talking about the energy space, I also want to flag off Kirutik's question on ONGC. So if you could address both Coal India and ONGC, PSU heavyweights, how are they looking on the chart?
Yeah, out of these two, I would like to go with Coal India. Very strong chart pattern, a very good dividend yield as well. A big rounding bottom is shaping up. So a decline can be a good opportunity for fresh entry in Coal India. The upside is open for target sort of 260 to 280. These are the immediate targets that we can expect from next one to 2 months perspective. But positional perspective, I think it's a very good stock, very good dividend yield as I mentioned, and positional target could be 300 to 350. Whereas on the other hand, ONGC, which is continuously making a lower top and low bottom formation, it is one of the underperformer as well from this pack. We are not getting that kind of conviction in this particular counter. It is better to avoid if you are looking for a fresh entry. If you are already holding the long position, then keep a stop loss below 120 and remain long.
Okay. Next query coming in from Subba Rao. He wants your outlook on Maruti. How's the chart looking?
A good chart pattern is shaping up in Maruti as well. A very good run-up we have already seen, and the only concern that we have is it has formed a double top sort of formation at 9,500. That is the major resistance zone, but sooner or later we see a breakout above the same. At current level, it can be bought with a stop loss below 8,200. The upside is open up for 9,500 to 10,000 sort of target that can be keep on radar for the next 6 to 8 month perspective.
Okay. One very quick question I want to take. This is from Monica. She's been posting comments to us since Thursday, Friday, so we couldn't take her question earlier. She's been asking about IDBI Bank, whether she should continue to hold or sell. We've seen a lot of action on the stock price on the back of divestment-related updates. But purely from a technical standpoint, what would be your advice?
See, Karunya, technically the stock has witnessed a good correction. If you look at last 12 years, the stock is continuously underperforming. After hitting the highs of 180, we have seen a lot of underperformance, and the stock is not able to pick up that kind of momentum. But although at current level, since it is trading near its base formation that is seen near about 32, that is the good support that it has. So there is no point to exit this particular counter at the lower levels. Wait for a pullback. If at all we see the levels of 55 to 60, that could be a good exit point, and it can be reviewed again near about 55 to 60. But at current level, stay put with the stop loss below 35, and we can expect some sort of pullback in this particular counter.
Okay, all right. What about your own picks in the market right now? Which stocks are you actively watching?
Right. So basically, there are two stocks that is on our radar, or both are on the long side. First, as we mentioned, the banking space that is looking very strong, specifically counters where we have seen a good earning, that is Federal Bank. A very robust number we have seen in the last week. And technically as well, if you look at a very good chart pattern, you can see, and it is one of the outperformer in spite of the weakness that we have seen in the market. And it has also given a multi-year breakout on the chart. So at current level, which is trading near about 130, it can be bought and also bought on decline for the upside target of 136 to 140. These are the conservative target that we are giving. But if somebody wants to hold from 1 year perspective, then target can be revised to 170 to 180. The stop loss should be placed below 126 from a trading point of view. The other stock that we are liking is again a multi-year breakout counter, that is IDFC Limited, where we have seen a good breakout from its almost 14-year long consolidation that we have seen. In the year 2008, the stock made a high of near about 90, and we have seen a good consolidation in last 14 years. Now, finally, in the previous week, we have seen a good breakout. And as a part of disclaimer, we have also recommended to our client. And the target in this particular counter can be kept to 80 on immediate basis. Positionally, target can be revised to 90 as well. The stop loss should be placed below 74.5.
Okay, so two names from the financial space, Federal Bank and IDFC Limited. Thank you so much, Nilesh, for joining in. On that note, we're going to wrap it up right here on Morning Trade. Thank you for tuning in.